let's talk about Apple's effect on the earnings picture, because it really is outsized. We mentioned this Monday on this show, by the way. We mentioned it, but let's talk about it in depth, because you and Brendan and Tinola have a story on it.
Yeah. Look, Apple, people have been talking about it for a long time, but if you're a top-down, looking at all 500 stocks, even looking globally, looking all around the world at companies, you don't look at any individual company. But Apple has now gotten to that point where even if you're a top-down guy, you're not a stock picker, you're not looking at balance sheets and earnings numbers with a magnifying glass. You're trying to be the 30,000 foot up. You're still looking at Apple these days, and that's because while the earnings trend has come off a little bit, Apple has just kicked it up another notch here, and it's distorted all of these underlying trends so much that one guy that we talked to at UBS, he is now putting out daily S&P 500 earnings reports and a daily S&P X Apple report. And he's not the only one doing that. You know, Morgan Stanley's doing that now, Goldman's doing that now, Wells Fargo's doing that. They're all doing that.
And when you do that, what do you see?
Well, what you see is, once you take away the Apple effect, you can see that the earnings picture is starting to deteriorate a little bit, and that's got to be a little bit of a worry. But if you're including Apple, and some people are making this point, like Apple's a real company. This is not.
Of course, I mean they count.
They
yeah,
count.
I mean it's not like in reality you just strip them out and they don't count. I mean I understand that they count.
This is not like taking the Boston Red Sox out of the AL East and saying, you know,
would that have any effect? No. But I mean, look, they count. They matter. I understand that. But when you're trying to figure out what is going on with the earnings picture, with corporate profit growth in the country as a whole, and you have one company that is so outsized in what they're producing relative to the rest, you have to start making these kinds of judgment calls.
Yeah, but on the other hand, you know, you're talking about year-over-year comparisons on corporate earnings after, what, 10, 11 quarters of consecutive growth. We've got tough comps to try and hurdle over, and yet we're still talking about S&P earnings of about 13 times. So, you know, you take Apple out of the equation, I'm still going to argue the corporate profits are pretty good. My question to you is, would you put Apple in the Dow?
Well, of course we can't do that because well, it's not my
decision.
decision.
Because we don't control it.
Yeah,
right.
So it's an important thing. But of course, the biggest question there is that the Dow is a price-weighted index, and Apple right now, borrowing.
Yeah, we'd be at 15,000.
We'd be at
tomorrow.
We'd be at 15,000 in a heartbeat.
Right. Maybe Barron's is angling for that right now behind the scenes, maybe lobbying. I don't know.
We're not that powerful. Or at least,
no, we're not.
Gosh knows I'm not that powerful.
Regardless of whether or not they are, I mean, yeah, you can see.
Oh yeah, that's our little graphic.
That's your graph in the story. Look, I mean, I think when you take Apple out and you look at the rest of the corporate profit growth, and you look at you talked about the economy. We had industrial production numbers out this morning.
That's right.
They were flat. You know, the jobs numbers look better, but everyone knows they're understating the real picture there. When I look at the corporate profit growth and the economy, put those two things together, excluding Apple, I see a picture that to me is rather muddy.
Does that bear itch?
Oh, gee, Bob, did you just think of that one? I never heard that one out of you before.
I haven't said that before.
No, but look, I mean, you have to be realistic. You have to be realistic.
And if I can thread the needle here between Bob's optimism and Paul's perhaps skepticism, there's
that is a 5-year chart, by the way, folks.
What you see is that earnings are slowing, perhaps, in the fourth quarter here. If you take Apple out, if you include Apple, it looks like things are barreling along at about the same rate, and that's the sort of image that these strategists are trying to screen out here by excluding
Apple. It's actually kind of interesting that they are trying to do it, because you would think, I would think most of the so-called sell side, the bullish guys, they would just take these numbers and run with them.
Right.
But it's very interesting to me that it's actually Wall Street firms that are starting to do this kind of calculation.
I think it's just gotten to the point where you can't ignore it.
And Apple, perhaps a little surprising with the passing last summer of Steve Jobs. You might have thought Apple was going to slow the acceleration of the stock growth, and certainly hasn't happened.
It's 34 days to get from $400 to $500.
500
34 days. Yeah.